Okay, interesting morning. Woke up, turned on CNBC, and all of the stock futures had gapped down to a 5%, what do you call it, a market uh, switch that froze trading in the pre-market futures trading, which was all exciting. And oh my God, they had just about every trader on, just wringing his hands, going, "Oh yes, this is it. This is going to be the one. This is the time where you back your truck up and start buying stocks like crazy." Um, I'm watching the open, and it's actually not as scary right now. We'll have to keep watching. We really don't want it to bounce. If it bounces off these levels, we could. It seems like we could drag this out for a long time. I think what we're looking for is capitulation. We want it to not only gap lower at the open, but to continually get worse as the day progresses, and hopefully really induce some panic selling. So I'll show you what it looks like on the S&P indexes. It doesn't look as bad because it hasn't reached the lows of previous sessions. On the Nasdaq, it looks much worse. What's happened? And it might just be an opportunity for shorting at this time in the morning. I'll show you. Okay, so here's the S&P 500 again. This is the 60-minute chart that I got up, the hourly chart, and you see the triangle that I've kind of created here. I'm not too exact, but not to worry. So what I was saying before was that this the bottom to the top is 200 points. That means pattern theory suggests that this is going to drop another 200 points. If you look at the weekly on that, 200 points from 900 takes you down to 700. The lows of 2002, 2003 were only 800. That would be another 10% below the lows of 2003, which I'm not so convinced that that's going to happen. If we go to another one, and by the way, if you go to the S&P 100, it all pretty much looks the same, as well as the Dow, which is the S&P 30, basically the Dow. If you go over to the Nasdaq, it looks a little bit different, and it's scarier in a different way. And that's because this is a descending triangle. You see a bottom here, almost a bottom there and a bottom there, and then you've got a triangle here. This suggests that if I go up to here, it's 2,200 down to 1,500 is a 700 point drop. That would suggest that we're going to 800 on the Nasdaq, which is it just seems unbelievable. If we do that, the lows of 2003 were just below, or about 1100, a 400 point drop. So that I'm having a little bit of a hard time believing. And then, but the Nasdaq 100 is a little more believable. If you look at this, it's 1600 to 1200. That's a 400 point drop, and that happens to coincide. 400 points off of 1200 is 800. That happens to coincide with the bottoms of 2003, right? We're talking 800. So, that these kind of things all add up. It doesn't mean it's going to happen, but yeah, it all adds up. And I'm starting to think I completely missed an opportunity 2 days ago to get back into this thing and short the market. But what I'm thinking now is I have an opportunity to short it now. This line of support that was support now becomes a line of resistance, right? And the same over here with the S&P. This line that was support now becomes a line of resistance, and this bounce up yesterday, this buying into it, was the perfect opportunity. And this is a pattern that you see all the time. You pierce down through your support and you bounce back up and test it. That's your opportunity. Get back into it and short it. So I think I might dip my fingers in anyway, even though it seems like we're already down some 4 or 5%. I think I might dip my fingers in anyway and see what happens.